Hello traders, it's Victoria from TRADEPRO Academy, and I hope everyone's doing really well. In today's video, we're going to be breaking down why you can use the micro futures to actually get better at trading futures in general, whether it's the minis or even the micros, just turning you into a better futures trader overall with this simple tool. So I hope you guys are super excited for this video, and let's get right into it. Now, the micro futures, as you guys may know, were created in 2019. A beautiful, beautiful thing happened because on equity futures, we now had the possibility to trade those futures with 1/10 of the original E-mini size. So what the CME did was create a new product that was actually 1/10 of the size in terms of tick value and margin, so traders can enter the market at a lower cost. Now, this did multiple different things, and we're going to break that down and why that can help you as a futures trader. They made equity mini micros for the S&P, the NASDAQ, the Dow, and the Russell. And with that, opened up a whole new wave of new traders coming into the market, also allowing those that previously traded the E-minis to get a better perspective on trading and actually trade even more or different size. So the beauty about this is that now you don't have to struggle trying to learn the E-minis with real cash, and instead you can drop it down to the micros, and we're going to explain why. So I'm going to break down a few main points as to why the micros can actually better your futures trading as a trader in general, right? Number one, we also understand that the micros are now 1/10 of the size of the minis, and that means they're 1/10 of the margin. This means that you're risking way less when you're getting into these positions and actually trading this market. 1/10 of the size and 1/10 of the margin means that you don't have to risk as much, right? Because an E-mini contract is $50 a point. This is on the S&P 500. The micro is now $5 a point for that same contract. And they move very, very similarly, simultaneously, maybe one tick of slippage here and there on the micros. Now, the other thing is the margin is cut down drastically, right? 1/10 the size of the margin. For example, if you have about $1,000 margin for one E-mini, that means you're going to have $100 margin for one micro, right? One S&P 500 futures micro. So that means that you can start trading with a smaller account, right? And start building your way up. Now, another great thing about the micros is as you're learning, right, as a new trader, you do want to spend some time practicing, honing a strategy, doing something of the sort, so you know that there's some confidence in what you're doing. Now, usually traders do this in a simulated environment or a demo account environment, right? This is great because it shows you that you can try different strategies, you learn different strategies without taking any risk at all. But there's a certain point that comes to this where you do have to use these in a live environment because let's be realistic, using real money is very, very different from sim money. Sim money, no one cares, right? You click here and there, you're moving stops, you're doing everything just to see a green number on the screen, right? It looks like a game. Now, when you put real money on the line, it's very, very different from both a trading and psychological aspect. Can you execute your trades emotionlessly and based on a strategy, or are you just clicking buttons around and blowing accounts? This is why the micros are amazing, because they are the stepping stone from simulated trading into the live world, right? You can actually put some risk on the table with the micros, and you can learn your strategies and learn better to trade futures with some skin in the game rather than going from simulated straight to minis. Because if you take a 2-point stop on the minis, that's $100 per contract. You take a 2-point stop on one micro, it's only $10 per contract. So keep that in mind. The micros allow traders to experiment with strategies a little more, right? Trying to find something that instills confidence and that works for them, right? This may be even looking at trade styles that have wider stops, because again, if you're risking less, you can afford to be a little more wrong at times, so you don't have to have that exact precise edge, especially with traders that have smaller accounts to begin with or want to start smaller so they can see that their strategy actually works before putting more money into something. The beauty of the micros is that they also allow you to scale, right? Micros allow you to increase your contract size without increasing risk too much. For example, with the minis, right, going from 1 to 2 contracts, if you have $100 stop in general, means you're going from $100 to $200, right, to $300, so on and so forth. And you're increasing the risk very drastically in larger increments. When you have micros, right, the difference from going from 1 contract to 3 contracts isn't that big on the risk factor. However, from a psychological factor and a confidence boosting factor, it really, really helps because you're learning how to scale and maneuver multiple contracts at a time without actually breaking the bank. So you can learn your strategy and build on that strategy. So that's a super, super helpful tool for those traders, even if they're intermediate or beginners, to really hone their skills in micros. Not to mention with micros, some people think that just because they're a 1/10 the size of the minis, that means that they can't necessarily trade well or trade big, right? When you scale up on micros, remember 10 contracts on the micro equals one contract on the S&P E-mini, right? On the futures. So you can actually scale to pretty sizable size. Yeah, okay, commissions is one thing that we do have to factor in because the micros commission at a certain point won't make sense. You rather trade minis. However, the maneuverability to have multiple contracts with the micros is huge. Now you can even get solid returns just by trading micros themselves, right? Keep that in mind. Multiple contracts, you can earn $3, $4, $5, $1,000 a day, even more. Now the beauty about this is that with micros, you can trade larger size with a wider stop, and it will still not necessarily be the equivalent of one mini loss, right? You can have these wider moves, and you're looking for those more extended gains. Obviously, the reward is not going to be as if you're trading one mini, but you have the maneuverability of multiple contracts and the ability to actually trail these things and look for those very large extended moves. Micros also help intermediate traders and advanced traders just as they can help beginners. Beginners use them as stepping stones generally to go from sim to live. Now, an intermediate trader might be using micros at a larger size quantity for multiple different reasons. Maybe they want to scale it back and relearn some of their strategy basics. Maybe they're not doing so hot and they can relearn some of those basics from the micros. Or maybe the market environment isn't that favorable for them that they don't want to put the risk of minis and they'd rather trade multiple contracts of micros to get still some kind of results and returns under the belt, right? It's a very, very vast pool of maneuverability and knowledge in the micros market. So to wrap this up, we want to just reconvene and see why these micros are so useful and why I'm pushing them so much. There's multiple great outcomes for trading micros. Even I trade micros a decent bit at a time because current market conditions and a lot of market conditions aren't so favorable for me putting a lot of risk on the table unless there's a really strong expansion and good move. To reiterate, right, micros are a great stepping stone from sim to live, right? Have some risk on the table, put some risk on the table, trade smaller size and just trade smaller denomination futures. That's where the micros come into hand. You can also trade micros with a smaller account. That's an amazing thing for beginners that don't want to open up a massive futures account because in some cases you do need a lot of money. The micros are a great, great tool. You can use micros to also develop and hone strategies, right? By having live risk on the table. That's the beauty of them. You can also use micros for scalability purposes. Learn how to actually trade larger size and scale, right? Micros are great for that because going from 1 to 5 micros isn't that big of a risk factor in comparison to 1 to 2 minis even, right? There's a very big discrepancy there. And micros finally are a huge, huge psychological tool. They really help you increase your discipline as a trader, hone your skills, your strategies, and doing this with smaller risks. They really, really help your psychology and you can build it up quickly with those micros. So having said that, right, come check us out at TRADEPRO Academy because we do have a lot of stuff based on micros and a lot of people there do trade micros. We talk about micros a lot and how they can be used as stepping stones and actually build upon your trading career as a futures trader and how you can actually become a better trader using micros or even considering trading micros. So if you enjoyed this, drop a comment down below, hit that like button, hit that subscribe button, and we'll see you guys next time. Now, don't forget, there's a link down below. If you like our DOM, if you like our depth of market and order flow, you can get that for free.